Okay, so what is the world telling us? Yes, we acknowledge that there are tariff wars, but it is something which may not have a very meaningful impact in terms of financial market positioning. China should have reacted by now, and I was looking at the Canadian market and the Mexican market, they've also managed to bounce back. So it is just a clear indication that, how financial markets in a sense have shrugged off, at least for the moment. For the moment, Aisha, that's the most important word. For the moment, this entire fear of the impact of the trade war. See, one is trade war or imposition of tariff, which is a real deal. I think a much more diluted version is going to come after the 30-day window gets over. But from a financial market standpoint, financial markets are saying we knew this was coming. There is nothing new. It's been adjusted, and those markets, and especially emerging markets, which are likely to take a hit, I think markets are pricing that in. For me, this number matters, and it's a very clear representation of the market mood, which is that the global volatility. We call it CBOE VIX. Now, please don't ask me why do we call it, what does CBOE stand here for, I don't know. But it is called CBOE VIX, and it is down 7%. So I would say that the world is looking like a better place. There is green on the screen, and there is definitely a lot of relief also, which is clearly evident. Before we get into specifics of Indian market, Aisha, just think about the fear versus event versus where we stand. Everyone's taken a jab on their face in terms of their portfolio. If you would have asked anybody, there were 4 risks in the market in the month of Jan. Number 1 was tariff war and what that would do to the world. Second was the budget. Third was Fed. And to a fourth extent, I would say it was earnings season. Markets have got much more from these so-called calendar events, which were supposed to be market-moving event. And that, I think, is something which will get acknowledged somewhere. Budget, consumers have got more. It's been a better budget. Tariff war, on expected lines. Fed, pretty much on expected lines. Earnings, not that bad. So from a market standpoint, the event risk, we've come on the right side of the event risk. What happens to market, we'll discuss, but I just want to make this point here upfront to establish that what the reality is and what the price action has been.
But the CBOE is Chicago Board Options Exchange.
I didn't know this.
And it's their index, which is the volatility index.
You live and you learn. Chicago, it used to be this commodity index.
Chicago Mercantile Exchange. Yeah.
So I had no idea they've come here and they've made a VIX. You live and you learn.
Yeah.
Sometimes you just ask yourself, okay, you read so many words and then you say, okay, arey, roj padhte hain, matlab kya hai?
Yeah. But for our markets as well, I think the big takeaway is that FIIs have finally turned buyers.
Yeah. So to put it very simply, will yesterday's rise, will that become a rally? Or is it one of those, sparks? So yesterday's price action, impressive. Very impressive. Yesterday's price action is certainly a function of what is happening in the world and how all the events in a sense have played out. Third, are we reaching that point of turn where foreign institutional investors, they will start coming back into India? And fourth, in general, could we reach what could be called as a selling climax in small and the mid-cap stocks? I think it's too early to assume that we are in for a V-shaped rally. Similarly, I think it is easy to assume that mid-cap, that Nifty surely has found some buyers at the lower level, and Nifty seems to be making a base. So for our viewers, what matters is that let's understand the trends here. The tilt is towards large cap stocks. Within that, it is banking. There is support coming at key levels, and if FIs really come back, then the positioning of the market is so oversold that little bit of FI buying can really force the bears or short sellers to cover their positions. So I really hope that this FI trend is not just a flash in the pan, because earlier this year also we got just 1 day of buyer number. If it is the 1 day of flash in the pan, then frankly nothing changes. But if this trend continues for next 2 or 3 days, I think it will force lot of traders who've taken this view that you only can make money by going short, that shakeout could happen. So I'm hoping that shakeout could happen, because that in a sense will just throw this market into a different kind of an orbit. Short sell, just like when there's momentum on the upside, there is momentum on the downside, and that shakes, the positioning changes.
Although it's been a very, very gradual, firstly, decline in the FII selling quantum, and then yesterday we've got that minuscule of a buy. Fingers crossed, let's see which way they actually move forward. But yeah, that is the question on everyone's mind. What's the way forward? If this FII comeback were to persist, you should have already jumped in
RBI,
the market.
RBI.
Yeah.
I think they hold the key right now because we've been on the right side of the budget. We've been right side of owning selectively. See, Asha, there are two ways you can stimulate an economy: fiscal and monetary. There is no other way. Fiscal is what the government has done. Why? Because they are, giving you more money. They are giving you more incentives, and they've already done a tax cut. So that's the fiscal part. Monetary is what RBI will have to do because the economy it needs both fiscal and monetary. And I think something comes from Reserve Bank of India, which is the acknowledgement, then action, and third, commitment. So if RBI, in a sense, acknowledges that, look, liquidity is tight, we've already moved, we will continue to move. Second, they give a clear sense that if not in this credit MPC meeting, next one, a rate cut would come in, and we would take a view not based on Fed, but based on what our need of the economy is. That is the commitment part. And if action comes in terms of doing indirect changes to the economy, in terms of making sure the credit availability comes back to the mean line of 12-13%, I think markets would be mighty delighted. So the puck has moved from North Block to Mint Street. North Block is where the finance ministry is. Mint Street is where Reserve Bank of India is.